Hi, this is Jerry. Today, let's talk about why so many companies are heavily investing AI infrastructure. It's a race or bubble. We are witnessing one of the biggest capital splurges in technology history. From Texas plains to global data hubs, the world's top tech players are pouring hundreds of billions of dollars into building the backbone for artificial intelligence. But beneath the headlines of limitless potential lies a question. Is this strategic transformation or the onset of an infrastructure bubble? Let's look at the numbers. In 2024, US private sector investment into AI reached $109.1 billion, according to the Stanford Institute for Human-Centered Artificial Intelligence. But that's only the beginning. Major firms are now committing tens to hundreds of billions to AI infrastructure alone. For example, Alphabet, Google announced it will use $40 billion over the next 2 years to build 3 new data centers in Texas. The Anthropic startup revealed a $50 billion investment in US AI infrastructure, custom data centers in Texas and New York. A report from Wired notes that companies such as Microsoft Corporation, Alphabet, Meta Platforms, and Amazon plan capital expenditures for 2025 likely surpassing $400 billion, largely driven by AI data centers. These data centers aren't your typical server farms. They are gigawatt-scale, multi-site facilities requiring thousands of racks, tens of thousands of GPUs, enormous power, and complex cooling systems. One study shows that the largest AI supercomputers in 2025 used hundreds of thousands of AI chips and consumed hundreds of megawatts of power. Every major tech firm is placing big bets, building the physical infrastructure now so they can monopolize the future AI value chain. Why are companies doing this? There are 3 major drivers. AI is becoming the most important technological frontier. Whoever controls the compute, data, chips, and infrastructure has a huge advantage. The cost of delay is rapidly increasing. Firms want to lock in scale before rivals catch up. Owning the infrastructure means controlling the entire value chain, from chips to data to models to applications. This gives power to monetize AI in multiple ways: cloud services, chips, enterprise solutions, AI as a service, robotics. For example, NVIDIA's partnership with national labs emphasizes this blueprint for the next industrial revolution. Governments are increasingly treating AI as a strategic asset. Tech sovereignty, national security, industrial policy. Large players see an opportunity not just commercially, but geopolitically. Investing in massive AI infrastructure now means aligning with national-scale incentives, subsidies, and first-mover regulatory advantage. Add to that, data centers have sticky economics. Once built, firms want to amortize them over decades. So it becomes a race. Build early, build large, even if near-term returns are uncertain. But with massive investment come major consequences and risks. Firstly, infrastructure oversupply and diminishing returns. If everyone builds huge capacity, you may end up with underutilized assets. Energy, cooling, chip supply, real estate all become constraints. Some analysts warn we are seeing early signs of an AI infra bubble. Secondly, margin pressures and capital intensity. These are not low capex businesses. For instance, one supercomputer project required hardware worth billions and consumed hundreds of megawatts. Returns may lag expectations, and if cost declines slow, economics become challenging. Thirdly, risk of strategic misallocation. Building infrastructure early is great if demand materializes, but if AI adoption or revenue generation lags, firms may end up with stranded assets. Consider how some cloud units disappointed despite growth in AI hype. Fourthly, economic and environmental impact. Gigafactor data centers demand huge power and water. They reshape local communities, job markets, and energy grids. They can create regional distortions. Finally, market and financial risk. When the story is strong, valuations rise. When execution lags, investor patience shrinks. The tech group's capex jump to $300+ billion means the stakes are enormous. If ROI is delayed, stocks could correct significantly. We're at a pivotal moment. The surge in AI infrastructure investment is both an opportunity and a cautionary tale. It reflects bold vision, scale, and competition, but also the classic signs of a late-stage boom. For companies watching, the lesson is build wisely, manage expectations, and prepare for execution risk. For investors, ask, how soon will revenue follow this capex? What happens if others catch up? How much return is embedded in the current hype? Because in technology, infrastructure wins matter, but so does timing.